Hello guys, so in this video I'm going to explain into detail what you are going to expect when it comes to your trial examination. So I'm going to do part 1 and the part 2 for paper 1 only. Part 1 and part 2 for paper 1 only, and just make sure that you watch both of them, okay? So guys, under paper 1 for trial examination, number 1, what you need to know is that you are going to cover everything from term 1. Everything that belongs to paper 1 is everything that you did on paper 1. Number 1, you're going to cover corporate governance, where you're going to do a audit report. Number 2, you will be learning about financial statement. Number 3, financial statement, we are referring to income statement, balance sheet, and cash flow statement, and ratio analysis. And after that, you will be also learning about a ledger account. But ledger account, guys, they are very rare when it comes to provincial and national papers. They are very rare, but you also have to have some knowledge about them just in case if they come. But they can't replace income statement and the balance sheet. You have to know that, okay? And you also have to know a fixed assets, guys. A fixed assets note, it can be either for paper 1 or for paper 2. So just make sure that you practice it for both paper. You will be good to go, okay? Also, the other thing, internal control, they are everywhere in accounting. So just learn them as well. All right. The next question. Okay, so in this video, guys, we are going to cover everything that I just mentioned. So some of the question is the question that I recorded it last year. So I find it more very relevant when it comes to a trial. So I just compile it with the one that we are going to record on this one. So the first question that I want to cover here, guys, is a cash flow statement which comprise financial indicators. All right, so let's start. We've been given a question which was containing 40 marks, and you were only given 30 minutes to complete this question. Discom Ltd. Okay, so basically this is the question paper that was written 2025 in Limpopo June examination. Okay, so I also compiled the question from different provinces so that it can mix up. 2.1, we're going to complete ordinary share capital note. I already drafted it, and we also complete cash flow statement, cash effect from operating activities, and cash effect from investing activity. Okay, which means that for part 2, I'm going to cover other activity. Okay, and we also going to do ratio analysis, current ratio, ROCE, and interim dividends per share. I think now we can go to information. Okay, so under information, they give us extract from income statement, extract from balance sheet, and some information. Okay, so under ordinary share capital that we're going to prepare first, guys, we were already given the amount of ordinary share. At the end, it was 5,852,000, and there was no marks. Okay, now we have to draft the rest: opening balance, share issued, and repurchase. Okay, information number D. 2,100 was authorized ordinary share. Authorized is a maximum number of shares that company can sell. Okay, and they say that at the beginning of the year, 70% was issued, which means that is 70% of 2,100. Okay, if you say 2,100,000 multiplied by 70%, is gonna give you a share at the beginning of 1,470,000. Guys, it's a mark. Just to write this, it's a mark. Okay, 70% of 2.1 million. Okay, then number 2, they say that 300 additional shares were issued. Share issued 300. There were 300. It's a mark. just to write this. And they said an interim dividend was paid, which was 318,600. Okay, and lastly, 230 shares were repurchased. 230 shares. Repurchase, it must have a bracket because remember, it's a shareholders who are no longer part of the company. So if you take opening plus addition minus repurchase, it's going to give you 1,540,000 share at the end. All right. So now, guys, now in order for us to complete the rest, let's start with number 1. We know that at the beginning the share was 1,470,000, but we don't know the value. But we can easily get it under our balance sheet. So under our balance sheet, shareholders' equity total for 2024, it was given 5,124,000. But ordinary share was not given, but they give us retained income. We all know that ordinary share plus retained income is gonna give you what? Is gonna give you shareholders equity. So in order for you to get ordinary share, you have to subtract the two. 5,124,800 minus 420,800 from information number B is gonna give you 4,704,000. This one, it was very tricky because some of you were going to calculate average. It was not like that in this case. Ne? Okay, however, average will need it because we're gonna need repurchase of share. 230,000. We have to find out how much was average. Okay, average is gonna be easy now because the closing balance, it has all the information. Opening, it also have all the information. Okay. How do we calculate it? A closing balance of 5,852,000. Okay, in order for us to get average, we say 5,852,000 divided by number of share, which was 1,540,000. It's gonna give us average of 380. 380 is the one that we have to multiply with 380, and now it's gonna give us repurchase amount of 874,000. Very simple. So now, in order for us to get share issued, we have to calculate it as a balancing figure. And now it's easy, guys, because you take this one plus this minus this. Okay, and remember, when you're starting from bottom, you must change the sign. Okay, it's gonna give you 2,022,000 like this. So if you want to verify, you say this one plus this one minus this one, it must give you this one. Then you will be done with ordinary share capital note. So it was contained 9 marks. Okay, that was a lot, guys. Imagine 9 marks is something. Okay, so now we are going to cash flow. Under cash flow, they said we have to prepare cash effect from operating activities. So you must know what fall under operating activity. Okay, so what fall under operating activity? We have a cash generated by operation. So this one, it was already given because it was not required to prepare 100. Okay, then number 2, interest paid. It is there under income statement. Interest paid under number A, interest expense is 78,000. Because it's outflow, we have to show a bracket. 78,000 like this. Okay, then the next one, dividends paid. Dividends paid, the formula is very simple if you have been watching my videos. Interim for this year, plus shareholder for dividends of last year. It will give you total dividends paid. Okay, interim dividends paid, it was given, guys, under number D, and interim dividends was paid and the amount was 318,600. Okay, 318,600, and you add it with last year dividends. Last year dividends under number B, shareholder for dividends of last year, it was 265,000. 265,000. And if you add this together, they will give you 583,600. 583,600, like this. Very simple. Okay. Now the next one, we have to do a taxation paid. Taxation paid, this is the formula that I use. You can compare with the one that you use and see what's the difference. The step one, I take the amount as negative from income statement. Tax amount from income statement. In this case, they give us net profit after tax of 637,638. So we have to convert that amount to tax of 30%. So what was given is 637,638, and it was after tax, which means that we are looking for 30%, and what we have is 70% because it's after tax. But if it was before tax, we were going to use 100. Okay, then amount is gonna give us 273,270. Okay, then after that we adjust from our balances. If you check under information number B, SARS income tax, what is given, number one, in 2024, the opening balance that was given is 36,600. Okay, so what do we do? In other words, when they said credit, it's like it's liability, debit is an asset. At the beginning of the year, guys, we were owing SARS an amount of 36,600. Obviously, this is the amount that we owe them from last year. This year, obviously, we already paid them because this is the debt of last year. You can't skip a year and you pay them into another year. It doesn't work like that. SARS will not play with you. Okay, so which means that this is an outflow. We owe them last year. Obviously, this way we have paid them, which means that it's negative 36,600. Then at the end of the year, now on the day that we are preparing this, SARS owe us, because it's debit, 21,000. SARS owe us 21,270. So what do we do? This is simple. This 21,270, because we know that SARS owe us, they're not going to pay us immediately. That amount is still with SARS. They're going to pay us next year, which means that this amount is still outflow because they're going to pay us next year. That money is not with us. It's still with SARS, which means that it's negative 21,270. Okay, and if you calculate, you're going to get amount of negative 331,140. There is no condition where interest paid, dividends paid, and taxation paid will be inflow in under total. They will always be outflow because paid simply means that you paid. You can't say paid, I paid, while you receive. It doesn't make sense. Okay, they are always outflow. The next one, guys, purchase of fixed assets. This one, it was very straightforward under number C. Extension to land and building were completed during the year, and the cost is 830,400. So we purchased the building, which was costing 830,400. This is obviously outflow. Why? Because we paid. We purchase. Once you purchase something, money is out. Okay? Proceed from the sale of fixed assets. We have sold the fixed asset. So what do we do now? This is what we are going to do. So on this one, we are going to use the formula, guys. Proceed from sales of fixed assets. We need to use the formula because we are not given any information. So the formula is like your note number 3. Carrying value at the beginning plus addition minus disposal at carrying value minus depreciation is equals to carrying value at the end. So you use this formula. One figure will not be given and you just solve X. Okay, so now let's check. At the beginning, a fixed asset carrying value was 3,830,000 plus addition, which we have it, is 830,400 minus depreciation. Depreciation was given under income statement. It was 413,000. Okay, then this minus the one which was sold, X, disposal at carrying value, is gonna give us carrying value at the end of 4,094,900. Now you guys, you know how to solve X better than me. I know you can. Even if you are doing mental race, guys, to solve X, you must know it. Ne? If you don't know how to solve X, go to e-learning solution SA. You will watch some other videos there. They will assist you a lot. Ne? Because I record the other subject on the other channel. Just go that side and you have to subscribe. You know that. Okay. So guys, now when you solve X, you start at the end. This one minus everything here, you just gonna change the sign. Whatever that is plus, you minus. Whatever that is minus, you plus. You must calculate it and you get this answer that I'm going to write. You must get 152,500. And this is positive. Why? Because guys, if you have sold something, you're going to receive cash, which means that it's a plus. Okay, and lastly, we have a financial asset which is fixed deposit. Fixed deposit, we don't have a balance of last year, so which means that we're just gonna write the one that we have. Change in financial asset is going to be 190,000. There was nothing to calculate on this one. Okay, so why then the next one, you have to calculate the total. The total, you take everything that is positive and you subtract everything that is negative. Okay, you're gonna get negative 487,900. Okay, and this side you're gonna get 3 million. Is it 3 million? 3. Okay, I think the total that I have here, guys, they did mistake, but you can just take this one minus this one minus this one minus this one. You're gonna get the answer. Very simple, né? Now that's how they ask the cash flow statement on this question. So let's move to the last part. Where is my... Okay, let's go to the last part. For those who are struggling with accounting, guys, it's not late. Come and join extra class, né? It's only 100 rand per month, and we are not going to stop, guys. Even if during the trial, the class will be on until the last day of the final examination. Until the last day we will be busy doing all these topics, because now, guys, we no longer choose that now we are doing term 3 only. Now we are just doing everything. We're just doing everything because some of you were not here when we started at the beginning of the year, so we're trying to cover everyone to make sure that you guys, you are prepared for trial, especially for final examination, because now trial is preparing you for final exam, and you can see subscribers are moving, guys. That target of 100,000 subscribers, we are going to kill it. So if you didn't subscribe, you can see others are subscribing. If we have more than 70,000 people who subscribe, and you are still, I don't know what you are waiting for. So subscribe, guys. 100,000 by November, we must be there. Okay, now the next question, we have to calculate the financial indicators. Number one, they said we have to calculate current ratio. Okay, current ratio is the first one that we are going to calculate. Guys, once they ask you current ratio in grade 12, you must dance, because this one is rare. Okay, if you check our current ratio that we have here, we are given inventory, trade and other receivable, and cash and cash equivalent. You just add those three. Is 720 800? Okay, let me write, because we got some other student. 720 800 plus 240,000 and plus 56 600. Okay, then after that we must say is to current liability of 360 700. All right, so if you add everything, you must say this plus this plus this, you're gonna get 1,017 400 is 2,360 700, and the answer will be 1 is to 2,8. This one is always 1, 2,8. This one divided by this one, you will get this one. So our current ratio is still good, because we can be able to pay a short-term liabilities and still left with something. Okay, number 2, we were required to prepare return on average total capital employed, which is ROCE, or ROCE, whatever that you can call it, is fine. Okay, for this one, you must know the formula, of course. So our formula, you have to add net profit before tax plus interest. So net profit before tax, guys, remember net profit after tax was given as 637.68. You must first get after tax. You are looking for before tax, I mean. You must say it before tax is 100, and what you have is after tax of 70. You are going to get an amount of 910 900. Is it 910 900? Yes. Plus interest expense, which is 78,000. Okay. Then this will give you 988 900. Okay, this one, then now we have to divide with capital employed. So capital employed in this one, it was given, guys. If you check under number B, down below there, it was given. Last year it was 6,800,000. This year it was 7,100,000. You must take these two and you divide by them by 1/2. Okay, then the next one, Remember guys, when you add these two, you must make sure that you do the average. Okay, so in order for you to do the average, you take these two, you add them together, then you divide by 2. Okay, so the answer that you're going to get here is gonna give you the average of 6,550,400. Okay, then answer you have to multiply by 100, of course. Okay, when we go to the final answer, guys, you must say 988,900 divided by 6,550,400. Then you multiply by 100. Okay, then the final answer will give you 15.1%. That's how you calculate it. Okay, but however guys, this one you must practice other papers as well, because in other papers you have a lot to do when you are calculating, né? So this one, it was way more better because they were already calculated this capital employed, because in other one you must add non-current liability together with shareholder equity, guys. Hey, that one is a process, but otherwise that's how you do it. Okay, the last one, interim dividends per share. Interim dividends per share. Okay, interim dividends per share, we take the dividends that was declared. Dividends that was declared, it was 318, if you still remember it, 318,600 from information number D. Okay, then we have to divide by number of share before. Remember guys, if you check here, the shares that we have at the beginning, it was 1.470, and share issued during the year, it was 300,000. Okay, so in this one you do not have to subtract repurchase. Why? Because this share of interim, everyone got the share. When you check the date, it was issued after repurchase of share. Okay, actually it was before, not after, because interim, it was issued on 30 September and the repurchase happened on 31, which means that even those 230 guys, they have earned those interim dividends. That's why you have to do what? You have to also include them. You must not subtract that 230. So which means that you have to divide by share of at the beginning of 470 plus 300,000, which is going to give you 1,770,000. Okay, then we multiply by 100. Okay, then it will give you 18 cents per share. So in other words, interim dividends, they were earning 18 cents per share. So that's how you calculate this, So guys, when you are practicing for trial examination, you can use March papers, you can use June, you can use the final examination papers that I did last year for the whole video. They are going to help you a lot, because a trial is like a final examination, so there is no any paper that is not useful for trial. Every paper is useful. Watch other videos, they are going to help you a big time, okay, to deal with a tricks when it comes to paper one of a company, because company guys, is more challenging if you didn't do many question papers, but otherwise all the best. So let's watch until it's done. I pick the most relevant question that contain almost every trick that can assist you, and the part 2 will also assist you big time. So for paper 2, I'm also going to do the whole video. There is some figures that you are going to work them through a ratios. So you never done that before. So make sure that you watch until the end so that you're gonna learn something. Okay, basically guys, we are going to start with our written income notes, and after that we are going to go to a financial statement of position. Okay, now let's check question 2, statement of financial position. 2.1.1, they say the written income notes, 16 marks. That's a lot of marks. Complete the statement of financial position, which is balance sheet, which is this one, and it contains 30 marks. That's a lot. That's a lot. Okay, so there was no any balance that it was given, which means that everything we are just going to work it out on our own. Okay, now let's check. The first one that we need to start with is retaining income. Okay, the information number A, list of the balances before taking into account all adjustment below. Okay, they give us ordinary share capital, which is question mark. They also give us retained income. Okay, a retained income, guys, however, they give us the balance of 25 February 2022, but our year is ending 28 February, which means that there could be something that has not recorded, or there could be something that has been recorded. So this one, we take it as a transaction of during the year. It's not opening balance, it's not closing balance. It's not opening, it's not closing. Okay, you must carry it from there. Okay, then let's check. The other information that is related to this note is information number E and F. Let's start with number E. An income tax rate is 28% of the net profit before tax. Okay, it was determined that the additional 190 is still owed to SARS in respect of income tax for the year. Guys, here what is needed is understanding of the ledger account that we previously did on our previous video. Okay, I'm gonna work this one this other side so that you guys you can see. Remember, when you prepare your SARS income tax, number one, on the credit side, you record income tax from income statement. This is the one that it can help us to do what? This one can help us to calculate a net profit after tax. If we have a taxation amount, we can just multiply by 72 over 28%. Okay, now because we don't have this one, we only have what we owe SARS. In other words, what we have, guys, it is what we carry down this side. It's a balance carry down of 190, which means that, guys, this amount of 190, we did a balancing figure this side. It was here as 190,000. Remember, it's the balance at the end, so we have to carry it down first to get what? To get the amount. Okay, now let's check how much did we actually pay during the year. Let's check information number A, SARS income tax for provisional tax. We paid. Remember, when we pay, it comes this side. When we owe more SARS, it comes this side. Because we pay and liability goes down, that 510 was recorded here. So which means that because this is the only two amount that we have, we can calculate what? This income tax as a balancing figure. We just add this, which is going to give us 700. 700 here, 700 here. Because we don't have any information here, which means that our income tax will be 700. Okay, this 700, guys, is the one that is going to help us to calculate net profit after tax. Okay, if you don't have understanding of this ledger account, you must go back to the first video that we did for chapter 1 and you master them, because otherwise, guys, you're gonna get this one wrong. Okay, now let's check. We have an amount of 700,000, which is fine, which means that this 700,000, because we are looking for after tax is 100 minus 28, which is going to be what we want, which is 72% over what we have, which is 28%, and it will give us the amount of 1.8 million. 1.8 million. Guys, when it comes to grade 12 balance sheet, nothing is easy. You need to work harder. Okay, you need to work harder. You must make sure that you also check other question papers so that you can master all kind of tricks, because there are so many tricks and they are very different. Okay, but let's work this one. It's gonna be simple after this video. Okay, now we get this one. It is fine. It's almost to 3 marks when you reach there, because there's a marks here, there's a marks here, and there's a marks here. Okay, almost is 4, because this 700 contained 2 marks, because it was not easy to calculate. Okay, now let's check. The next information we must get: share buyback and dividends. Let's check information number F. The share and dividends, they give us 4 bullet. Okay, under this 4 bullet, guys, number 1, they say the company paid interim dividends of 800,000 on 1 September 2021. Interim dividends was given as 800,000. That's fine. And final dividends, they say that a final dividend is 70 cents per share, which means that we must get number of share and we multiply by 70 cents. 70 cents multiplied by how many shares? Now let's check. At the beginning, we don't know how many shares we had, but they bought back 30,000 share on 25 February by 5 rand above average share price. And the other one, they said at the end we had 2 million shares. Now we want to know who are they going to in this 70 cent. Guys, all of them, because these were declared before everything was concluded. That's why this bullet is bullet number 2. The date is irrelevant. Once they give you bullet number 2 as a final dividends declaration, just know that the next transaction of a share buyback is not going to be excluded. They will be included and they will in what this share. I also did an example to those who are attending my classes that, guys, what you need to check also here is that this share was repurchased on 25 February. This shareholder, they were there for the whole year. How can they not in a dividend just for difference of 3 days? It's 25 and 28. Imagine you invested into a company for the whole year, 363 days, 362 days, and the rest of the 3 days you were not there, and they said you are not going to get anything. There is no way, guys. You were there for the whole year, you were working as a shareholder, so they're going to in, which means that we have to take, at the end they said after they excluded 30,000 shares, the remaining was 2 million, which means that 30,000 we must add it back, because they are going to in, because it was already taken out. So it's going to be 2 million and 30,000. Okay, and it's gonna give you amount of 1,421,000, and the total will be 2,221,000. Okay, then the next one, now let's consider the issue of share buyback. We buy back 30,000 shares. Now we want to know how much was a loss, because retaining income notes will record a loss, average we record it under ordinary share. How much? Let's check. Let's quickly check. They say that 30,000 shares were repurchased on 25 February at 5 rand above the average share price of 15. 5 rand is a loss, average is 15 rand. Here we use 5 rand, and it's going to give us 150,000. 150,000. And when they proceed, they say that this was recorded. That's make the balance that we have of retaining income of 2.3 million on top under number A. That amount, it was supposed to be opening, but because they recorded this, that's not opening because it has included what happened during the year. What happened during the year must be subtracted in order to have what opening balance, which means that here opening balance we're going to have 2.3 million minus 150, which was recorded. Remember guys, this amount was subtracted when it was recorded. Because it was subtracted, now when we reverse it, we must do what? We must add it back. In accounting, when you cancel what was added, you subtract. When you cancel what was subtracted, you add back. Just like that. Okay? And it's gonna give us amount of 450,000. Very simple. Just like that. This one is a minus, and if you calculate the balance at the end, you will get 187.9 million. Okay, it's like this, which means that this amount, obviously we're gonna go to retain income and we record 187.9 thousand. Okay, now let's quickly proceed to the next one. The next one, let's go to, I think now we can quickly go to the balance sheet. Number B, debtors with credit balance totaling 15 million must be transferred to creditors ledger. Okay, we have a debtor who have a credit balance. Credit balance is a minus, which means that when you transfer, which means that you must add. A debtor, guys, is an asset. A debtor is an asset. Assets increase on the debit and decrease on the credit, which means that when they said a credit, it simply means that this debtor had a minus. Okay, which means that when we cancel or when we transfer, we are going to add. Okay, let's go trade and other receivables. We're gonna start with opening balance, which was 820 on our balances. Then we say plus 15,000. Okay, the next one. No, guys, we're not done here. Remember, this is being transferred to what? To payable. In other words, the debtor that used to borrow to us, we now owe him. It's no longer what? It's no longer assets. It's going to be a liability. Okay, we are going to add under liability. So opening balance, it was 1,666. This one is a copy and paste, guys. No need to explain. It's a plus 15,000. Okay, the next one. On 28 February 2022, Fragile Ltd returned 20 air condition to supplier which was purchased on credit. Cooler wholesaler will return as a business, which means that our inventory are going to be subtracted. Okay. They said the selling price was 12,000 each and the markup was 50%. We must first punch a markup to this 12,000 to make it cost price, because here we don't record selling price, we record cost price. Okay. Markup is 100 over 150. Okay, and if you do this calculation, you will get the cost price of, let me calculate, of 8,000. Okay, then 8,000 multiplied by 20, you will find that we are returning multiplied by 20, we are returning 160,000 inventory that we bought on credit, which means that even our liability must go down. Okay, we're gonna start with balance here. Balance was 780,000 minus 160,000. Okay, here we're gonna have 620 because we no longer have other transaction related to it. Okay, this must subtract what? Liability also, because we can't pay something, we can't have a liability of something that we return. Okay, minus 160, just like that. Okay, number D, a fixed monthly installment of 40,000. Let me run this so that I can write calculation. A fixed monthly installment of 4,000 to cover loan repayment and interest has to be paid over the full period of the loan, and the interest will decline over the life of the loan, and the repayment for the current year has been paid and recorded. Everything was recorded and it was paid. Okay, the loan is gonna start as 900. Okay, what is more important here, guys, is that they want what? Current portion of a loan. Okay, they say the loan, the interest on loan budgeted for the next year is 280. We are going to pay interest of 280 next year. Current portion of a loan, guys, is a repayment subtracting what? Interest. Payment, we have it, but it has include interest. But this 40,000, guys, is in a monthly. We must first convert it into a year. 40,000 multiplied by 12, we're gonna get 408 in a year. This is a repayment that has include what? Interest. And the current portion of a loan is a repayment without what? Interest. Let's take out interest that they give us, which is 280. We're gonna get a current portion of a loan. Very simple. 200,000 minus 200,000. Okay, current portion of a loan, guys, is being transferred from long term to short term because it's going to be paid within 12 months. It's no longer more than 12 months. Okay, current portion of a loan, 200,000, just like that. Okay, and the next one, number E, we did it. Number F, we did it. Number G, the following financial indicator was calculated on 28 February 2022, and the net value per share is 6.20 Rand. Okay, guys, here they want us to calculate shareholders equity, because this ratio, or this ratio is going to help us to get what? To get shareholders equity. A shareholders equity, guys, is the same as assets minus liability equals to shareholders equity. We are using this formula. Okay, however, guys, before we proceed to that, let's fill the other information like cash in the bank, which was given, cash and cash equivalent. We had a 2,438,100, and the other one, I think we have fixed deposit. Fixed deposit is 400,000, and the other one, accrued income. Accrued income is an asset. We must add 25,000. Okay, and we also have accrued expense, which is liability, plus 16,000. Okay, I think if we add that, we are going to have these balances, which is 537,000, and the other one, SARS income tax. We owe SARS 190, if you still remember, under information number E. SARS income tax, we owe them a 190, is liability. But guys, this transaction, if they said SARS owe us, which means that we have to record it on top. Okay, so now let's check the other one, because in a balance sheet, if you mess up one item, you're going to get a lot of things wrong. I think here we can write a total 860,000. Okay, I think current assets, we can now have our total, because if we don't have some total, we're not going to get other amount. 3918,100. Okay, fixed the asset is not given, it's a balancing figure. And the other one, let me quickly check. Shareholders for dividends is a final dividend, this one that we calculated. Okay, a final dividend is 1.42100. Okay, which means that under current liability, we have everything. We can calculate the balance, which is 234800. This one is gonna be 700. Okay, now let's check which other one. Which other one? Total assets. Okay, under assets we have current assets. Total we don't have because of this, and non-current liability we have. Current liability we have now, which means that we can use that ratio. So now we have to use this formula of net realizable value, which says a total asset minus a total liability, which is which we divide by number of shares, which is gonna give us this amount of 620. Why 620? 620, guys, because 620 cent, when you convert it to rand, you just divide by 100, it's gonna give you 620. Okay, now we need to get this total assets minus total liability, which is the same as equity. Here, total assets minus total liability is equal to equity, which means that we just have to take this one, multiply by this, it's gonna give us this. Okay, we're gonna say 620 multiply by all shares. In this case, we also have to include what? Those share buyback shares, because they were repurchased at the end. Okay, it's gonna be 2,030,000. But if it was repurchased in the middle of the year, we were going to do what? We were going to use what we have at the end. Okay, so if you multiply this, you are going to get shareholders equity of 12,586,000. Okay, then our shareholders equity, guys, we take this one minus this one, is gonna give us our ordinary share capital, which is 10,707,000. Okay, now we can get our total equity and liability by saying shareholders equity plus non-current plus current is gonna give us a 15,634,000. All right, which means that total equity is the same as total assets, which is going to be 15,634,000. Okay, so now what do you think? How are you going to calculate this current liability? So please, let's make sure that before we leave, guys, let's subscribe and let's make this channel grow more and more and more and more, so that even accounting can be like those science channels that they are more than 100,000 subscribers. So it's because of the support that side. So let's do the same this side. don't go without subscribing. The more you subscribe, guys, the more we post many videos. But if subscribers are very low in grade 12, which means that we're gonna record more for other grades that are subscribing more. So let's subscribe. It's also gonna help those who are coming to grade 12 because the channel will be growing. Okay, now we want to calculate this one. It's very simple now. Total assets minus current assets is gonna give you the current asset. There is a lot of balancing figures, guys, in this grade 12 balance sheet. So it's gonna be 11,701,900. Okay, in order to get fixed assets, you just said this one minus this. It's gonna give you a fixed asset of 11,315,900. That's how you compile all this kind of balance sheet. So this is the method of grade 12. There is no any other cheaper way that you can deal with a balance sheet in grade 12. Okay, so I hope you learn something and you enjoy. Those who want to buy a study guide, guys, it's only 100 rand soft copy. Come and get it so that you can get a practice questions like this that are good. So before we start with the previous question paper that I have for today, I want to give you a briefly or a background of audit report. All right, so as you know that under audit report we have 3 different types of audit report. Okay, I want us to discuss these 3 types of audit report. All right, basically what is going to happen here is that they're going to give you a scenario where something happened in a company and they ask you to identify the type of audit report in that situation, and from there they're going to ask you a further question from the audit report that you have identified on the previous question, which means that this is very important, guys, to understand these 3 different types of audit report. Okay, the first one that we have unqualified report. With number 2, we have a qualified report. Then the third one, we have a disclaimer report. All right, so this is 3 types of audit report that we have. Of course, as you know that as an auditor, after you go through all the documents of the company and you prepare financial statement, you have to express your independent opinion. So after you express that opinion as an auditor, you have to tell us which report did you identify from this company. All right, which means that obviously there might be a good report, a better report, and a very bad report. So now we want to identify which one is good and which one is bad. All right, so I want us to go through some notes that I have here. So let's read the understanding of the first one, which is unqualified report. This type of report is issued when the financial statement of the company are found to be free from material misstatement and are in accordance with the general accepted accounting principle. It is positive report that indicate auditors' satisfaction with the company's financial report. In other words, this is very, very good audit opinion. In other words, auditor has found that everything was prepared according to the principle of accounting, which means that every company wants this kind of a report. Okay, which means that unqualified is a good report. It's a good report. All right, but in other words, it doesn't mean that the auditor is saying that he is 100% sure about whatever that has been prepared. He is just making assumption according to what he saw or what he go through when he was auditing onto that company. Okay, now let's go to number 2, unqualified audit report. A qualified audit report is issued when the auditor identifies a certain limitation in the financial statement that may have a significant impact on overall accuracy and fairness of the information presented. This could be due to inadequate documentation, non-compliance with accounting standards, and unsolved uncertainties. The auditor expressed a reservation about the accuracy or completeness of financial statement, but still provide an opinion about their overall fairness. So when we talk about a qualified doesn't mean that it's good. Yes, we know that if they tell you that you qualify for something, which means that it's a good. When we come to report, qualified is not that good. Okay, in other words, guys, they're saying that the financial statement, they are fairly presented, but there is something bit that is missing out. Okay, and they also mentioned that this could be due to inadequate documentation, which means that this can happen because maybe there is no proof that something has happened. Okay, so that's why the auditor can issue this kind of report, because he's not sure about the documents, because there's no documents that show the proof that this something happened. All right, which means that this is good, but something is missing. Something is missing out. Okay, then the last one, we have a disclaimer. Okay, or adverse audit report. Okay, this audit report is most a serious type of audit report. It is issued when the auditor determines that the financial statements are materially misstated, misleading, or do not comply with a required accounting principle. This report indicates that the auditor has substantial concern about reliability and accuracy of financial statement and cannot provide any assurance regarding their fairness. An adverse report or disclaimer report is stronger indicating that there is a serious problem with the company's financial reporting. So guys, this kind of report is very bad. It's very bad. It's when the auditor found that it's not only one error, but there are so many errors into that company. A lot of things happen, but it was not recorded according to accounting principle, which means that this statement is not fair at all cost. Okay, which means that a lot of corruption might happen. So if they talk about a corruption into a scenario, of course you have to pick this one, a disclaimer note. All right, so you have to understand this type of report before you go to your question. So now let's check the question that I have. Okay, 1.2, audit report. An extract of the independent audit report is provided. Okay, let's first read the information. Okay, issue by LTD extract from the independent auditor report. Based on opinion, a donation of 1.2 million was made to a local community organization for provision of face masks and hand sanitizers to local schools. Proper procedures were not followed and no documents were available to verify the said transaction. In other words, there was no any other proof that is indicating that this donation was made to a local school. Okay, then audit opinion. In our opinion, accept a donation that did not follow due process. The financial statement are fair presented the financial position of the company on 28 February 2021. In other words, the auditor only find one major error, which was a donation. So now we have to go to question 1.2.1. 1.2.1. Identify the type of report and explain why this type of report was issued by the auditor. Which one do you think it can be correct? Do you think it's a disclaimer? Do you think it's a qualified? In this case, it's gonna be a qualified. It's gonna be qualified. The reason why it's qualified is because the financial statement are good, but there was only one error that was identified, which was a donation. Okay, 1.2.2 explain 2 why shareholder will be concerned about the companies receiving such a report. Why do you think that the shareholders will be concerned about this report? Okay, this is question 1.2.2. Okay, obviously the shareholders will be concerned about internal control of the company. Internal controls are weak. Why are weak? Because there's no documents that show a donation. If there is an internal control, obviously those who are responsible for donation, they were supposed to have a document that has a proof that there is a donation that has been made to a local schools. Okay, then the second one, the shareholders will be concerned about a potential investors. Obvious, if there is a serious issue like this, investors may pull out. Investors may pull out, or new potential investors may not come and invest into this company because of this kind of error. Okay, then another one is that the directors appointed by the shareholders, they are not reliable. They are not reliable. Okay, the directors who are responsible are not reliable. The directors that are responsible for this kind of transaction, they are not reliable at all. And the last one, we can state that there's no proof of the document, no proof that the donation has reached the school. It can happen that there was no a donation that has been made at all. You find that the directors use that money for their personal use. Okay, then the next question, it was that the CEO requests that the auditors classify this donation as a sundry expense and adjust the audit opinion accordingly. Provide 2 reasons why the auditor will not agree with this suggestion. Remember, we are talking about external auditors. They express opinion independently. They don't care about the company, but they care about their professional. Okay, 1.2.3. So what do you think? The auditor will not agree. Okay, number one, guys, remember auditors are registered. Auditors are registered with a professional body. Like SAICA. as you registered for professional body, guys, if you do something unprofessional, they're going to penalize you, or they're going to take the certificate that allow you to become auditor, which means that they can't risk their job because of one company. Okay. Number 2, the request is unethical. The request of the shareholders are very, very unethical. Okay, in this case they are looking for 4 point. Okay, then another one is that the auditors has to be independent. They don't have to take opinion from someone. They have to be independent. Okay. Then the second one is that the auditor, the last one is that the auditors may be concerned about the reputation and the future assignment. Like what I said, that remember, guys, if you as an auditor, they find that you are doing something wrong, they are not going to give you another companies to work because you are very corrupt. Okay, so this professional body, guys, they want someone who work truthfully, independently, without being influenced or without taking a cold drink money. So it's not allowed from these professional bodies. Okay, then the last question is that apart from issue mentioned above, explain why company will be accused of poor corporate governance. Why do you think that this company will be accused for poor corporate governance? Okay, this is question 1.2.4. all right. Number 1, they're looking for 2 point. Number 1, the CEO should be in a place to be interested of the company and shareholders first, which means that the job of CEO is to make sure that the shareholders are satisfied with the company. All right, which means that, in other words, when we employ a CEO, we want to make sure that the CEO run a company smoothly with no corruption, with no issue. Okay, that word will be point number 1. Then the last point is that he must exercise ethical behavior in dealing with company's matter. In other words, the CEO must deal with what? Ethical behaviors. Ethical behavior, and ensure that he deals with the company's matter. Okay, so this is how you should answer audit report and corporate government. But what is more important, guys, is to understand these 3 types of audit report and make sure that you also know the possible answers that you are going to provide when they ask you why this is good report, why this is bad report, and how. You must be able to answer that. So I hope you learned something into this video. Thank you so much for watching, guys. I'm gonna see you on the next one. Goodbye. So obviously, income statement, guys, is for paper 1 if you are writing paper 1 and paper 2. So please make sure that you watch the whole video, because I'm going to explain everything from sales until the net profit. So also, if you are coming here for the first time, guys, please support us by subscribing, because this channel is still going to help you to go through accounting when you go to grade 12. Okay, so let's start with our question paper. So the question paper that we have, guys, it was written 2023 in the province of Limpopo. So you have to make sure that you also watch other videos, guys, because I did the other videos from different provinces. So it's best to learn the different kind of trick from different provinces. Okay, so let's read our required. Prepare the statement of comprehensive income, which is income statement for the year end 30 June 2022, which means that our year started 1 July 2021. So you have to take note of that, because we have to use a 12-month period when we prepare income statement. Okay, so information number one, they give us list of some balances and total of goods hope traders on 30 June 2022. Okay, then they give us from trading stock until a sundry expense. All right, then after that they give us other additional information that we are going to read them one by one. Okay, so when we prepare income statement, guys, the first part, of course, we have to deal with what? A sales, cost of sales, then we go to gross profit, then after that we're gonna proceed. All right, then the balance that we need to check first is from our pre-adjustment or trial balance. Okay, then if you check on the trial balance, we have a sales amount of 1,032,000, which means that we have to open a bracket first, guys. We don't just write it in the as a final amount, because we don't know if we have any transaction that is going to affect our sales. Okay, so it's amount of 1,032,000. Okay, then after that, guys, remember this is the amount of sales. This is the goods that we have sold. But if something has been returned, we have to go and do what? And subtract. Okay, because it can be part of sales if a customer has returned that good. Okay, then we have the words debtors allowance. When we talk about a debtors allowance, guys, this simply means that our customer has returned a good, which means that we have to go and take out that amount of debtors allowance of 32,000. 32,000. All right, now before we close this one, we must first check as well on the adjustment, if we have any adjustment that is related to a goods returned by the customer. Okay, let's take additional information. If you check additional information number 2.3, a credit note of 225 issued on 30 August 2021 to Monty has not been recorded. The stock was returned by Monty because of the wrong t-shirt. So this customer returned the goods because the color is not the one that the customer is looking for, which means that that amount is no longer sales. We have to do what? Subtract. Minus 225. But you have to take note of this, guys. If you check the last part, they say that the markup on cost for these goods was 50%, which means that this amount we still have to subtract it under cost of sales, but using a what? A cost amount, because this one is a selling amount. We have to subtract that 50% using a markup calculation. Okay, so this one obviously we are going to close now because we don't have any other transaction. Then it's gonna give us 999 and 775. Okay, now let's go to cost of sales. The first one that we have to start with is the one on the trial balance. Okay, on the trial balance, guys, we have 427,000. This one you just copy and paste there. Then after that we have to subtract that amount that I was talking about, but we have to calculate what? We have to calculate a markup first. Okay, how do we calculate a markup? Now, because we are going down, the higher percentage must be on the bottom, which means that we are going to say 225 multiplied by 100 over 150. Why 150? Because the markup is 50%. This side is always 100. We just added that 50% that they give us. If they give us 20, it was going to be 120. But this calculation is applicable when you are going down to cost of sales. But if you are going up to sales, you have to put 150 on top and this one on the bottom. Okay, so if you do this calculation, you are going to get 150. So I don't have a space for calculation. I was just showing you how I got this 150. I use this calculation. Very simple. Okay, now our cost of sales, we can calculate it and get the total. Remember, cost of sales is always on the bracket. It's 426,850. Then after that, you just subtract these two and you're gonna get a gross profit of 572,925. All right, so we are done with the first part. Okay, then the second part now, we have to calculate, apology, I was supposed to write here 572,925. This space will be for other income total. Okay, so now we have a side of other income and side of expenses. Okay, then I already listed the other income that we have so that we won't waste a time, as well as a space. I was trying to measure a space because we also have a lot of expenses. So we have rent income, discount received, bad debts recovered, provision for bad debts. I'm still going to explain why in this case it come to other income, because sometimes you will find it here on the expenses. Okay, let's keep watching. So the first one that we are going to follow on our adjustment, if it is there, it is discount received. Discount received, we don't have any transaction. We're just gonna copy 4,200 from our trial balance, but there was no marks allocated there, so you don't have to worry about that one. Okay, then another one, we have a rent income. A rent income, the first step, we open a bracket and copy the one that we have on our trial balance. Okay, so the one that we have, rent income, is 47,250. Okay, now we have to go to additional information number 2.5. They said a rent income include the rent received until 31 July 2022. The monthly rent was increased by 10% with effect from 28 February 2022. So in this case, what happened is that they already included the rent for July. They included rent for July, and remember our year is ending June, which means that there is advance payment, which is not allowed under income statement, which means that we have to subtract here. But now the question is, how much are we going to subtract? Okay, we have to do some complex calculation in this case. Okay, so if you check, they say the rent has been increased by 10% from February, which means that the one that we are going to subtract has already included what? A 10% increase. So this one I'm just going to show you on the calculator so that it can be very simple for you. Okay, so this is how you should calculate a rent income. So 2.5, they said the rent income received until 31 July 2022, and the monthly rent was increased by 10% with effect from 28 February 2022. So if you check here, the rent has been paid for 13 months because our reporting period end 30 June 2022, and they pay until July, which means that we have to calculate 13 months here. Okay, so we have to get amount before rent increase, because the amount that we have of 47,250 has included the amount of rent increase and before increase. So this is what you need to do on your calculator. First, determine how many months before rent increase. In this case, we're gonna count from last year 1 July 2021 until 28 February. So it's going to give us 8 months before rent increase. Then rent increase from 1 March 2022 until July. Then it's gonna be in this way. 8 months is for before increase. Then you said plus 5 months is after increase. So guys, when you add them together, they must give you 13. So please make sure that you do it correctly, because if you put 7 the other side and you put 6 the other side, even though it's gonna give you 13, you're not going to get the same amount. Okay, then you said you open a bracket And you say, remember they said the rent increased by 10%, which means that on top is always 100, then you add 10 and it's give you 110. Okay, and here you write 100. Formula is always like this. On top you just add the percentage that has been added. So if you do this calculation, you're gonna get 13,5. This 13,5 is the one that you're going to use to divide the amount that has been given. They give us 47,250 and you divide by 13,5 that you got on that calculation. Then you will get the amount before rent increase. Then the amount before rent increase is 3,500. Okay, then after that, now you can calculate after increase that we need to subtract on for July, because it doesn't belong to financial reporting period that we are doing. Okay, then you're gonna get amount of 3,850. So this is how you should calculate the rent when you are given a percentage increase. Okay, then after that you are going to subtract the amount that we got on our calculator of 3,850. Okay, then after that you will get amount of 43,400. Okay, now let's proceed. Another one, we have a bad debt recovered. Okay, bad debt recovered, they give us on the trial balance, they give us amount of 1,000 from our trial balance. Then after that we have to check on additional information. Okay, under additional information number, let me check which additional information. Additional information number 2.7. Bobby Lewis, a debtor whose account has been previously written off, deposited amount of 210 in the bank account of the business. So this person was written off already. We were already give up that we are not going to get this money, but somehow this person come back and pay amount of 210, which means that it's income to us, it's other income. We were not planning to get it. Okay, then we're gonna get amount of 2,110. Okay, then provision for bad debts, we're gonna go to adjustment number 2.9. The provision for bad debts must be decreased by 200. Listen very carefully. So this one has decreased. What is provision for bad debts? This is the people that we are doubting that are they going to pay us? If more people are not going to pay us, it's loss. But if less people are not, we are doubting that they are not going to pay us, it's profit to us because more are coming to pay. If it decrease, if number of people decrease, it's income because more are going to pay. We're no longer doubting them. But if they increase, it's going to be expensive because more people, we are doubting that they are going to pay us. Then it will be income in this case because it has decreased amount of 200. Very simple. So after that, we no longer have any other income. Then we're gonna get amount of 49,010 rand. Okay, very simple. So after that we have to go to gross operating income. You just add gross profit and other income, then you will get gross operating income of 610,935, just like that. Okay, then let's proceed. Now we are going to expenses. We have a lot of expenses. Okay, but I want us to start with these three expenses that there was no any max allocation in this case because there was no any adjustment and the amount was given. Okay, so number one, it was salaries and wages, 163,700. So in your answer book, this amount were already written down. Okay, so they didn't allocate any marks because is more obvious. Okay, these three amount. The first one is salaries and wages, discount allowed, and sundry expense. Now we have to go to water and electricity. There was a max here. The reason is because we have to work out something. Okay, the first one, we have to take it from our balance or list of balances. Okay, it was 25,000, and we check additional information. Okay, additional information number 2.11, water and electricity for June 2022 has been received but not paid. Okay, amount of 5,000. They are saying that it was not yet paid. If not yet paid, we have to add it. If paid in advance, we subtract it, because we are making sure that everything that we record is for 12 months. Okay, so this one is for June, and our year is ending June, which means that it's still within our period. We have to add it, we don't subtract. Okay, then I think it's gonna give us 30,000. Simple. Okay, now let's go to insurance. Insurance, we have to open a bracket because we have some workings that we need to do. The first one, we take it from trial balance, which is 6,400. Then after that, we go to additional information and read. Okay, additional information number, the one for insurance is 2.4. Included in the insurance amount is annual premium of 2,400 paid for period of January 2022 to December. Remember, our year is ending June, which means that they already included until December, and we don't have to include advance payment, which means that we have to cut on June. January to June, we are going to take it because it's still within our period. The other one, we have to subtract it. It doesn't belong here, which means that we're expecting to subtract something here. But the amount that they give us is 2,400, which is for 12 months. So because we are going to take for 6 months only, the calculation that you need to do is 2,400 multiplied by 6 over 12. I know that you can just divide by 2 and get the answer, but try to use this method. The reason is because if our year it was ending July, you were supposed to write 7 here. And now it was going to give you a problem. How much are you going to use to divide? So it's another story. So just use this method. 6. Then it's going to give you 1,200. 1,200. Okay. Then after that, you just calculate, and you're going to get the amount of how much? 5,200. 5,200. Very simple, guys. Very simple. So if you are studying a grade 11 and next year you are still going to do accounting, please make sure, guys, we are selling a study guide for accounting, as well as for mathematics, as well as for those who are doing mathematical literacy, because I know that some students, they don't prefer a pure maths, but they prefer maths literacy. You can just text us so that we can arrange for you, so that you can get a study guide, so that you can prepare yourself for grade 12 at the lower price, guys. Very cheap. Okay, let's proceed. The following transaction is packing material. Okay, packing material, we have adjustment, which means that we have to open a bracket. Okay, then the first one, we have a packing material of 4,200. Where did we get this 4,200? Okay, let's go to our trial balance. Packing material is 4,200 on our trial balance. Then additional information number 1, we have to add what we purchase. It's like we are saying opening plus purchase minus closing. Simple as that. And 2.2, we have packing material of on hand for the year end, which is 900 minus closing. Opening, purchase minus closing. You know this process. You do it when you also do a manufacturing account. Okay, then it's gonna give you 3,800. This is free max, guys, free max. Okay, then now let's proceed. Another one, we have a stationery. We check on the trial balance first. A stationery, we have amount of 4,100, and we check if we have any adjustment for stationery. Okay, for stationery, they say that 2.1, a packing material of 500 purchased on 21 August 2021 was incorrectly posted in the stationery account. So the one that we record here is correct, of 500, but it was mistakenly recorded on the stationery account. So which means that we have to go and subtract it on this account. We are going to say minus 500 because it was recorded on the incorrect account. Okay, then after that we're gonna we will be done with stationery account. We just subtract here. The reason is because this amount, it doesn't belong to stationery, but it belongs to packing material. Okay, then it's gonna give us 3,600. 3,600. Okay, now let's proceed to bad debts. Bad debts, the first step, obviously we are going to take the one from trial balance. This one, I think you're familiar with it. You just take the one from trial balance, copy it, then we check additional information. Okay, additional information number. Okay, let's check the one for bad debts. I think it's number 2.7, 2.8. Okay, account of Ronaldo, a data for 450 must be written off as it comes to light that he has left the country to play soccer in France. So this person is no longer in South Africa. Obviously, he's not going to pay us anymore, which means that we have to do to write this person off. We are going to add 450. Okay, then it's gonna give us 1,950. Very simple. Okay, then another one, we have bank charges, but bank charges, it doesn't have any adjustment. Just gonna copy it, 840. Then after that we have a trading stock deficit. Okay, let's show this one. It's very simple, this one, guys. I know that some people, they complain about it, but let's do it. The first one that you are going to take is from our pre-adjustment. Guys, when you start income statement, any adjustment, you start from our trial balance, then you go to additional information. From trial balance, we have 81,000. Okay, then after that, remember we have a amount of 150 of goods which has been returned, which means that if we return goods, it's going to add on our trading stock. We have 150 which has been returned plus 150. We are adding it back because customer returned it to us. Okay, then after that, you're gonna minus a closing of 79,100. Okay, the one which is on hand on adjustment number 2.2. Then after that, you're gonna close it and you will get a trading stock deficit of 2050. So if we don't have deficit, you're gonna get 0 when you do calculation. Okay, which means that if you get 0, no deficit. Okay, then depreciation. The last adjustment, they said 27,470, is for depreciation calculated for the year. So there was no need to calculate any depreciation in this case because it's given. Okay, then after that, guys, I think we will be done with all expenses. Then after that, we're gonna get a total of 281,000. Total, you have to make sure that it is on the bracket to show that it's an expense. Okay, 281,110. Okay, now we are going to last part, operating profit. Operating profit is gross operating income minus expenses. Then it will give us amount of 340,825. Okay, then interest income. Okay, let's open a bracket. Interest income that we are given, interest on fixed deposit, it will fall under interest income, is 500. But additional information 2.10, they say sum of interest of fixed deposit is outstanding, interest is not capitalized. Okay, which means that we have to check. If you check on our list of balance, fixed deposit of CABC is 8% per year. Then the amount that we have is 12,500. If you take 12,500 multiplied by 8%, it's gonna give you 1,000. Okay, so this is the amount that was supposed to be recorded here, which means that the one that they are saying that sum of interest on fixed deposit is outstanding is different between 1,000 and 500, which means that we have to add 500 so that it can give us 1,000 this side. Very simple. You don't just calculate this 8%, you get 1,000 and you record 500 plus 1,000. No, because already 500 has been recorded. It's sum of interest. Okay, then profit before interest expense is gonna give us 341,825. Okay, then another one we have interest expense. Interest expense, the one that we are given is 360. We open a bracket and say 360. Then after that we do a calculation for additional information 2.6. Okay, under 2.6 they provide us information about a loan. Okay, they say the loan statement received from ICC show the following: balance and repayment, interest capitalized is not given. Then another one, they give us balance on 30 June. This one is very simple, guys. You take opening balance minus repayment minus closing. In other words, you say 42,875 minus 10,000 minus 40,000. Okay, it's 10K, 40K. Then it will give you interest capitalized, which is going to be 7,125. This is the one that you are going to add here, 7,125. Okay, and you will get 7,400 and 7,485. Okay, then after all, guys, that's where you're going to get now your net profit of 3,340. So that's how you should compile your income statement. So I hope you enjoy and you learn something on my video. Please